All right. Yeah. So let's wait for a few more folks and then we will get started. But today it's like our last week, previous week was all about learning, lessons learned. We talked about SVB and some of the lessons, not really lessons from SVB, but how the treasuries, even holding treasuries, can upset your plans. So we talked about that. Today we want to talk all about banks. We want to talk about what's happening in the banking sector. It looks like SVB was not the only one. Now this has spread to other banks, even at the international level. So I do want to talk about what's happening on the banking side, and also we'll talk about banking as a service. That's a topic that we've been trying to cover for the past few weeks, but never get enough time. So hopefully today we'll be able to go through whole banking as a service, what I see in this industry. It's a little nascent industry, but I see some new players coming in. So we'll talk about banking as a service. And of course, we'll look at macro side, what's happened over the last week, some of the news, Twitter feeds that caught my attention, and anything else that you may have in mind, or you have any questions you want to go through, we can discuss all that. Anything specific you guys had in mind? But that's overall my structure is. All good. All right, so let's so I'll come back to this question. There were some questions from a previous session that were unanswered because I was in a rush. As you guys recall, I had to go out and we had to cut down the session to an hour. And during that, there were some questions came in. I went through the chat and looked at some of the questions that I could not answer or probably missed out. So I do want to go back to those, but let few more people join who had asked those questions, then we can get back to it. So let's look at the macro side, banks. So last week we got into details of what was happening with Silicon Valley Bank. And then we are seeing the same contagion spreading across other banks. The next one, which is got its target on its back, is First Republic Bank, right? And despite almost $30 billion of funds injected into First Republic Bank by the private companies, by JP Morgans of the world, Citibank and Wells Fargo, and now this is not coming from Fed. This $30 billion of lifeline is actually coming from other banks, the so-called big banks. So which is at one side, it's surprising. Why would so-called competitors? Because if First Republic Bank goes under, most of the business will actually move towards to bigger banks like Wells Fargo's and the Citis and the Bank of America and then JP Morgan's, right? So why are they injecting $5 billion to keep First Republic Bank afloat? I think some of the pressure is coming from administration, but also I think this will go to restore faith. All they're trying to do is to restore faith of depositors in US banking system. Banking is all about faith. If the depositors start to lose faith in the banking system and start to withdraw from their deposits from the banks, even Wells Fargo, Bank of America, they all would be under pressure, right? No bank is big enough to sustain a bank run based on how our banking system has been working. So it is right now, I think restoring the faith is way more important than this $30 billion that these private companies have loaned out to First Republic Bank. So we'll see, but I don't think as of now this has still helped. Again, little bit similarities between Silicon Bank and First Republic is both are serving similar kind of clientele, uh, uh, or not same clientele, but high net worth individuals. First Republic doesn't really have the same level of exposure to mortgage bonds what Silicon Valley had, or the long-term security what Silicon Valley Bank had, but the amount of uninsured deposits is still higher because they support, wealthy clientele. So from that perspective, it could still be prone to the kind of a bank run that we had seen in Silicon Valley Bank a week earlier. So I think they are now. It's gone back and forth. I think I have a tweet about that, so probably we'll go to that in terms of, yeah, everything is good. No, we need some money. No, we are okay. No, we're trying to sell and all that stuff. We really don't know where it will end up into. At least the story keeps developing by day by day. So will be interesting to see what happens to the First Republic Bank. If this goes under, that's going to be the third biggest bank to basically to be insolvent. Right? And on the other hand, we hear administration saying all is good. I don't buy it because especially in the financial sector, and if you look at the other areas, like when there is a lack of faith in the financial sector where people go to invest, we see those areas are those instruments have performed really well. So I don't buy it that right now everything is good, but what do? There's a run on all the regional banks. Even FDIC had to come and guarantee the depositors, even the uninsured depositors of Silicon Valley Bank and the Signature Bank, saying you'll have access to all of your funds. Are they going to do same for all regional banks? Maybe. I don't think they have a choice. So we should see more and more. I guess we're going back to that money printing area. There is no other option. So it's a tough spot for Fed to decide what to do. So that's at closer to home, and outside we saw Credit Suisse. Now that's tumbling. And I have a zero compassion for Credit Suisse. I mean, they've been involved in so many shady stuff. I used to joke, I think in one of our earlier session when we were talking about Aggregators Capital, I'm like, how come in all the shady deals or in all places where we see some issues, Credit Suisse names will always come up. Right? It's a 160, almost 170-year-old bank, in the second largest in Switzerland. But over the past few years, I think this is going back all the way to 2015 till 2023, they got their fingers in all the wrong places, right? They were indicted by Justice Department and had to pay fine for helping US residents evade taxes. Then there was a spying incident, and in which the Credit Suisse was actually spying their own high-level employees. So the CEO had to resign. I think it is 2018 where we saw a collapse of their XIV, and they do have some exotic volatility ETNs. So that had collapsed. That was again issued by Credit Suisse. And I think few more they had closed afterwards. Then we saw in 2020 or 21, Aggregators Capital, when that hedge fund went under, Credit Suisse took almost $5 billion worth of loss, high leveraged, no risk management, all that stuff. They've been in all shady stuff. And so they've been losing money. In 2022, annual loss was their biggest loss since the financial crisis. So there have been talks about, when Credit Suisse will fall, but given the recent contagion that we saw in US and the final straw, kind of, I would say the straw that broke the camel's back came from Riyadh, right? Of all places. There was a conference in which the head of Saudi National Bank was asked a question. And Saudi National Bank is the largest shareholder of Credit Suisse. There's almost 10%. They own 10% of CS. They took that stake last year. And the question that was asked is, would you invest, what do you think about Credit Suisse? Are you gonna increase your stake in Credit Suisse? The answer was definitely no. And I think that spooked the other investors, saying if the biggest backer is not coming to rescue or coming to save CS, Credit Suisse, then there's something really wrong. So that share also collapsed. And if we pick up, let me just pull up Credit Suisse, and I don't hold any Credit Suisse shares, so I have no dog in this race, but let's say 5 year from $15 all the way to almost $2. So at some point in 2007, they were almost close to $70. So nothing but they've been just hemorrhaging money. But this bank is really big. A lot of wealthy people, a lot of institutions deal with it. It is considered to be one of a systemically important bank for the world financials, not just for the Switzerland, but also for the whole Europe, EU, and the rest of the world. So this will definitely have some repercussions if this goes under. Even just to save Credit Suisse, Swiss National Bank opened up a $54 billion loan facility. May not be enough. Looks like that's not enough. And now there are discussions on whether the other big bank, I think that's the largest bank, UBS, United Bank of Switzerland, are they going to buy? They've gone back and forth. They have told, oh no, we don't want to buy Credit Suisse because a lot of toxic assets that they may have. But I think the latest news was they're going to about face on it and say, maybe we want to buy it. So have to see. But if this goes under, this will have much larger repercussion overall to the financial sector across the world than what we are seeing, with the with Silicon Valley Bank or anything else. This is way bigger than those couple of regional banks. So, but yeah, we'll see how it goes. But right now, there's a commotion across, I would say, definitely in US, across all regional banks, and now we are seeing in the EU as well. Even in UK, some of the smaller banks, I guess all those banks who have been holding long-term maturity fixed income instruments, those could be US treasuries, those could be mortgage bonds, those could be corporate bonds, or any kind of a fixed income securities, long-term fixed income securities. These banks are all under scrutiny right now because they are all holding those assets which are underwater. If you look at Silicon Valley Bank, today no one would want to buy them because if they want to buy it, it's a negative equity, right? Because all those bonds are underwater, and the moment you buy it, those will have to be marked to market, and no one wants to buy them. So it's been a week. We haven't, regulators haven't been able to find a buyer for Silicon Valley Bank yet. So to at least contain this contagion, or to provide a lifeline to all these banks, Fed has now increased its balance sheet already by $300 billion. So Fed isn't trying to reduce the balance sheet over the last almost a year. They started from, if let's say this was the top, almost 9 trillion from mid of April. They've been trying to reduce their balance sheet. Now, within a week, we have undone 6 months of work. Right? You can call it QE, call it whatever you want to, bail out. I know everyone, especially from administration, they're saying this is not a bank's bailout. This is not QE. This is a lending facility. But call it whatever you may want to. The Fed has gone back and increased its balance sheet by $300 billion in just a week. Or so, and I think I do have this even may not be enough. So are we going back to injecting liquidity in the markets? Looks like. So from of 2020 BTFDs, now we are to BTFP, right? And so which is basically Bank Term Funding Program. This is where Fed has gone and said they're going to open up a new funding facility available for all these banks, all these regional banks, to tide over, to get through the current crisis of a lot of these depositors when they want to withdraw their funds and banks don't have funds because, they have those assets which are now underwater. Either you sell those assets and you take on that loss, and that's what SVB did. And then we have seen what happened to SVB. And now I think Fed is concerned, saying, oh, if every bank has to go through that, that's going to shake up the whole confidence in the banking system. So what Fed's going to do is, okay, guys, you can put those hold to maturity bonds. You can loan it to Fed and can withdraw billions of dollars from this facility. And Fed is willing to value those hold to maturity bonds, not at the current market value, but what would be its maturity value, right? So if its current market value is $90 and the maturity value will be $100 after 5 years or whatever, so Fed is willing to value it at $100 and give a loan of $100 to these banks. So, and these banks can use those proceeds to tide over the current liquidity crisis, right? As we talked earlier, this is not a solvency issue right now. It's a liquidity issue. Those bonds will be worth their maturity value, but not right now. It will take some time. So current liquidity is that's what Fed has opened this a term funding program to tide over this liquidity crisis. But this is only open for 1 year. At least that's what as of today. But I'm not holding my breath for it. If this is not resolved, maybe it will become another one of those programs, those government programs which are generally, when you open those programs, those are for a particular duration, but then you keep on extending those. So right now, this is available for next 1 year until March 2024. And so essentially we're kicking the can down for another year, right? This whole banks which are underwater. So we gave them a lifeline or opened a lifeline for them and hopefully avert the crisis. But this is not going to fix the root cause, right? Which is how the kind of a depositor that these banks had and the kind of mismatch of a duration risk between their assets and liabilities. None of that has been fixed, right? Yeah. So, but right now the money printing has gone back to work overtime. I also read a news that $300 billion may not be enough. So JP Morgan strategists, their contention is that we may have to have at almost $2 trillion. Right? It could inject anywhere up to $2 trillion because, hey, right now we're just talking about some banks which have already, seen this crisis. Of course, Silicon Valley Bank, we had a Signature Bank, we have First Republic Bank, then there are other like Key Bank, Zions, some of those regional banks. But if we look at all across the regional banks, smaller banks, essentially the overall, if depositors' faith is shaken and if they want to withdraw their deposits, overall it could go up to $2 trillion. And this does not include if this contagion spreads to bigger banks like the JP Morgans and the Wells Fargos of the world. Those banks are sitting of maybe another couple of $1 trillion of deposits. So it could become really huge. And the only way is Fed has to come and backstop, or, provide a backstop for this. And that means they have to inject or that amount of they have to print, if I may use that term, because nothing is printed, but if they have to print another $2 to $4 trillion out of a thin air to provide a backstop if there is a real crisis, if this becomes a much bigger crisis than contained to a fewer smaller banks. It all started with SVB. Oh, that's a very particular bank. Its customer base is very different. It's the business that it does is really different, and the management wasn't right. Now we're seeing it's spreading to other banks as well. So I don't know where it's gonna stop, but at least be ready, be prepared for it. Let's not get shocked if we see a few more banks tumbling. Fed is getting ready for it. They already opened a funding facility right now, $300 billion. But if I were to believe JP Morgan's, it could be as big as $2 trillion. Who knows? Another chart I saw, number of US banks failures till 2009. It's during the GFC, we had a lot more, but over the past few years, there has been a very few bank failures. Right? So I think maybe some failures every year is probably healthy. Right? It's like, you weed out those bad players. But similarly, having some of the ghost companies going through bankruptcy is good for economy. We need some of those. But over the last 4 or 5 years, there has been very few bankruptcies. So I don't know what all those banks who were flush with liquidity, with zero interest rates over the past few years, what else they might be sitting on. Last number I heard was almost $600 billion underwater. These banks are $600 billion underwater on their treasuries or on the long-term fixed income securities. That much right now they are sitting on a paper losses. However, that doesn't really reflect on their P&Ls or on the balance sheets because of the way accounting works. And that's why now we're getting surprised because, hey, you just released your Q4 and things were all hunky-dory, things were looking good. What happened within a month? It is because your accounting allows you to mark to the maturity value, and we never realize that you may have to sell it before the maturity. Now, the issue is these banks are forced to sell it before maturities, and all those bonds are underwater. Anyway, so I still see, I think, still keeping my fingers crossed on overall banking sector. I'm not gonna go and dip down into individual of these banks, try to buy these dips, because I don't know which one of them will survive. For sure, a government is not gonna come back and save the investors. They'll probably, these all funding lines is to save the depositors. But when there is a panic in the market, I think those are the times to pick up some of the players. So I'm looking at, looking at only at the bigger players. Right? I'm not gonna not looking at these regional banks right now. So that's all on the banking side. I think I'll have few more tweets. We'll go through that. So what happened over the last week? Stocks were mixed. And because the financials were down, I think energy was down, but then there's also hope that because of all this turmoil, which has been a kind of caused by increase in the interest rates, now market is already projecting that Fed probably will go moderate in rate hiking. Right. So last week, before the crash, it was almost certain that we're going to have a 50 basis points hike. And now within, I would say 10 days, now there is a market is actually pricing in zero likelihood of 50 basis points next week. So next week we have FOMC meeting, I think 21st, 22nd. So we'll get to know on 22nd. What's the rate hike scenario will be. Right now, the market is pricing only 25 basis points hike. So if Fed in turn comes back and do a 50 basis points, that's going to be really bad for the markets. So right now they are only pricing 25 basis points. Over the last whole week, no one is talking about inflation. Now, all the concerns have moved towards the financial stability, right? Fed has been increasing the interest rates to contain the inflation, but if that action from Fed is causing the concerns around financial stability, US and outside, maybe that would be a bigger problem to solve, and maybe Fed could pause sooner. So now the new terminal rate by end of this week, not this week, wow, by end of this year is 4.75%. It was almost 5.75% if I recall last time when I looked at those numbers. Now we're looking at almost full 1% is down. Right? And that's good for the stocks. But this whole this financial contagion, we saw stocks tumbling, and then we saw stocks being positive, market reacting positive, because hey, if Fed stops goes slow in increasing the interest rates, that bodes really good for the assets, right? So that's why it was almost a mixed week for the stock. Overall, S&P was up. Despite all the crises that we hear, S&P closed up for the week. And looks like bond market is already starting to price in, or a bond market is projecting that Fed is gonna pivot, or Fed is gonna first pause or first slow down then pause, and then pivot. So look at the 2-year treasury yield. The 5-day drop was the biggest since 1987. So the yield on two-year treasuries dropped by almost 120 basis points. That was the highest since it's become what, 40 years, 35 years or so. And this is one indicator, and I didn't know about this until I read about it today. Past 30 years, whenever 2-year fell below the federal funds rate. So right now, 2-year is below the federal funds rate. It has signaled the end of Fed hiking. So that's another chart wherein the 2-year falls below your Fed fund rates. So the one which you see in bluish is Fed funds rate, and the other one is your 2-year. So whenever the 2-year falls below Fed funds rate, you see a pause or a slowdown, and then you see a Fed funds rate coming down. It's happened in 2000, 2006, 2018, 19, and now it has fallen back. Again, these are historical performance, is no guarantee of a future performance. So keep that in mind. But if it indicates anything, maybe we should see either the so from faster and higher rates to maybe slower and lower rates in future. Yield curve is gone back in the opposite direction. We had a yield curve inversion, which was the max in last 40 years. But after this, in last 1 week, we see that inversion is now moving into reverse direction. So we'll see. But that's, if this is reality, if we believe in this, that the Fed funds rate will actually pause or grow slowly and eventually will come down, then that's really bode well for stocks. And I think that this did give some optimism to the markets, even though there was a crisis in one particular area. That really bode well for stocks. Especially will be, some of those risky ones also should pump up with this. Yeah. So that's on overall macro side. If you look at so far, S&P is up 2% year to date. NASDAQ is up 11%. So NASDAQ was almost 4.5% up for the week, which generally happens if we see Fed funds or the rates coming lower. That bodes well for the companies that have not making money now, but will make money in future. Many of the NASDAQ companies are on that, right? So we see NASDAQ jumping up 4.4% for the week. Surprisingly, energy was a surprise for me because oil is down 14%. So where we were looking at after Russian invasion, maybe $150 per barrel, now we are back to 60 or 65, something like that. I guess that is because of the winters have been not that cold, and so the demand is not that huge. Other than that, I think that's from my perspective. I think the main story is, again, at a macro level, watch what's happening with the banks, and then what the Fed will do. By the way, ECB has raised rates by 50 basis points. And if Fed keeps saying, as Jerome Powell has been saying it, we are data dependent. We're going to look at the data, right? Inflation, even though it was just slightly better, but it's still inflation at 6% plus, right? And if we follow the cues from ECB and raise by 50 basis points, that's, at least in short term, is not good for the market, because market is pricing 25 basis points. But we'll get to know. No one knows what's going to happen, what FOMC will decide. But next week going to be a fun week to see. All right, any questions, anything else you have been watching at a macro level? All right, let's go back. Now I see some of the folks who had some questions in the previous sessions are back. So I do want to go through some of the questions that were asked, or some of the comments that I had missed. I was in a little bit of a rush last week, so apologies for that. So I'll cover those things now. So Sam, you told that you bought BABA options expiration July 2024 at 90. Sorry, and I assume that 90 is your strike price. You bought it last week. Again, VIX has been very, I'm not a option buyer, so I generally don't buy it. But VIX has been really high over the whole last, I think, where's the VIX now? I know that it had crossed 30 last week, but it had probably come down. Now it's back to 25. Yeah, so still, I mean, it's between up in the higher 20s, depending on where you bought it. At least in this high VIX area, I don't want to buy anything. We are paying too much for the volatility. But we'll see. BABA, hopefully, I mean, I still hold BABA in my portfolio, but it's got its own different set of a risk, which is your sovereign risk. And I'm waiting to see how that performs. And then we'll go from there. Anyway, the other one was, there was a question on what happens to SVIB options. So I had mentioned that OCC will have details for it, and they do. You can actually, let me just open that up. So you can find this on OCC website around what happens if you bought a put option on SIVB. Now those shares are no longer traded. So what happened to your options, right? So that is still, you're not going to lose your right to put the shares, even though the shares are not there. So right now it's going to be broker to broker. So if there's not going to be any, I think, any automated settlement. You'll have to call your broker and say, I want to exercise my put option, right? So look through the OCC website. Just Google search OCC SIVB, and they do have a details of how this is gonna, how the options on SIVB will be settled. So there are some details of, not settled through NSCC, but it's going to be broker to broker. It doesn't really matter for us, whichever way it's going to get settled. But important thing is call your broker. Because someplace I heard was, it's may not going to be an automated exercise. So you may have to call your broker for that. Third question that I missed was, while we were talking about the learning from so-called risk-free trade, wherein this was a Nicola trade way back in 2020, and we looked at that this is not really risk-free. The risk was in early assignment, and then we also looked at an example of how some of the traders lost, their whole account value, plus they also owed more to the broker on these trades. So I think there was a question from Jay saying, if it is early assignment, can you not just do the reverse trade immediately with the shares? So that's a Good question. So, but let's understand the mechanics of how the assignment happens, right? It doesn't happen during the trading hours, right? So assume this is the trade that I have in place, right? Stock is at almost 70. I have a short call at 65. Trading day is over. Let's say you get an early assignment at the closure of a trading day. Now you have an early assignment. You've been assigned at 65. Right? So there are two things. One is, if you have a stock, that's okay. Then the broker probably won't close your account. But if you don't have a stock, which is where many of the examples that we saw where traders lost their shirt and their account and the pants, was they didn't hold anything, Nicola, but the only thing they had was an option trade, right? And that too, like 200 contracts, 110 contracts. So there are two things. One is the broker will have to borrow those shares, and the borrowing cost was 400% or 600% too high. Number two is, say you get assigned the short call at 65, means you will be short of those, you will be short of shares, and you have $6,500 coming into your account. But the stock is so volatile. The IV in the stock was more than 100%. I don't even recall what, but I'm sure it was more than 100%. Won't be surprised if it was 300% at that point of a time. So IV staying so high, you got assigned at 65. Next day morning, it might open at 95. It might open at 120. Who knows? So to cover your short position, now you have to buy in the morning at 120. So you lost 100% on it. And if your account is not big enough to do that trade, broker will close it. And that's what brokers did. If you did just one contract, yeah, it's only what, $6,500 loss. Let's say the stock goes to 130 in morning and you were short shares, and broker will force you to close your short share position because the borrowing cost is too high. Jay, yes, you can buy back you can reverse the trade by buying the shares, but you lost depending on where the share opens. So in these shares, which are very volatile, generally in the meme stocks, we have to be really careful when we are trying to look at some of the trades that seem to be a zero risk trade. So I hope that answers the question of, could you reverse it? You can't do it immediately because the assignment will happen after the market closure. So you could do it, you could reverse it at the morning. First thing in the morning, you could go and reverse it by buying the shares. But who knows, the share could open up double in the morning. And that's the risk which brokers didn't want to take, especially if the position size is too big. And I think that's what had happened. I hope that clarifies your answer. Pishing, go ahead, Pishing. Look, you raise your hand.
I think you have chat disabled, so we cannot even comment.
Oh, is it?
anything. Yeah.
Hold on. Thank you. Oh, thank you for telling me. Oh, geez. Yeah, I think my apologies. Looks like while trying to control some of the stuff to avoid the whole Zoom bombing stuff, I actually disabled chat.
Yeah, and nobody could unmute to tell you that.
Oh, you can't unmute yourself? Did I do?
No. Before, no.
Okay. Oh, geez. Sorry. All right. Not that I don't want to talk to you. I think I went overboard in controlling, and this time I probably made a mistake.
So I also have a stock. What's going to happen with the stock?
For SIVB?
Yeah.
So I think whenever it begins to trade, it will be available. But right now, what I heard, It's not heard. On Friday, SIVB has filed for bankruptcy, so the stock will go to zero. So they filed for Chapter 11. So if you hold the stock, unfortunately, that is worthless.
Okay, so we lost everything.
Yeah, sorry about that, but yeah, they filed for bankruptcy on Friday. So the stock will become worthless. I don't know. There is no trading on it, and now since they filed for bankruptcy, so there is no value in the stock anyway. So now the last thing you can do in some of these situations, again, I'm not really sure because I haven't yet gone through this myself, but because you can't trade it anymore, let's say if this is no longer tradable, you could call your broker and and there's a process in which and I don't know what that process is called, but I was also like a couple of years ago, no, last year I was looking into this because I hold some stock that is not even tradable, but I'm like, I have to take that capital loss. I can't take that capital loss because I can't sell it. I can't sell it because it's not tradable. So there is a way in which you can call your broker and kind of terminate that stock and then can claim a capital loss. I haven't done it myself, but there is a way to do it. I have to explore it. So if you want to claim the loss on this one, you'll have to talk to your broker. There is a process in which they can do it. Okay, Sam asks, can you explain the bank run? Okay, now I know why there were no chats. Can you explain the bank run to current bank situation? So bank run is basically when the depositors start to panic and want to withdraw their funds all together. So most of the banks, including the big banks, can withstand, let's say 25%, 20%, 25, 30% of the depositors come back on the same day and say, I want to withdraw it. I think they have enough funds. 50% of the deposit comes in. I think even the bigger banks like Wells Fargo and JP Morgan, they will not be able to bear that without, selling some of the instruments that they hold. So this is a classical bank run. And right now, First Republic, it is because First Republic serve a high net worth clientele in California, and the amount of uninsured deposits, because it's a high net worth, a lot of people have more than 250K in the First Republic Bank, and which is above the limit of FDIC insured. What the market is assuming that, those people will start to withdraw the amount and move it to the bigger banks, even though FDIC has come back and told that they will provide insurance to the uninsured deposits. But sometimes when it's a crisis, no one thinks rationally, and that is why the next one looks to be, hey, there will be could be a bank run on First Republic, because the percentage of uninsured deposits is really high. Not as high as Silicon Valley Bank. Silicon Valley Bank had, I think, 94% of uninsured deposits, because most of the startup VC money, which runs into millions of dollars, was there. But even the First Republic Bank has, I think, around 70 to 80% uninsured deposits. And now imagine those depositors coming and withdrawing money, moving it out. That's what, is a concern. Okay. Sachin, one can submit claim from Chapter 11 bankruptcy as well. So I think, again, I don't know the details. Now, after the Chapter 11 bankruptcy, the shares are no longer traded. I think then you can go ahead and submit it, because at the end of the day, it is a loss, right? So you have to claim a loss on your investments that you made. for your tax purpose. Jay said SBNY puts, brokers want to allow ITM maximum profitable puts last week. Yeah, so that's I think I also saw somewhere on Twitter that some of the brokers were not allowing. I think you should be complaining to OCC about it, because OCC did not.
No, the OCC didn't help. There's chats with the OCC there too.
But OCC did not stop it. I mean, if read through there's no way OCC said that you cannot exercise it.
But the brokers were saying they want 300 to 900% margin, which would make it impossible to have short positions in stock.
Yeah, of a short positions in stock, yes.
Well, yeah, because to exercise a put, you end up with
if you don't
stock.
have exactly. If you don't have a stock, you become a short stock, and the margin is almost
people who bought a few contracts. People who bought a few contracts of puts do not have millions of dollars to take that kind of a position.
Yeah, so that's another risk. This whole, and this seems to be the similar to the Nikola case, wherein the brokers didn't even want to get into, they close the accounts even before the assignment happens, because the risk, if assignment happens, margin of holding that position in like 600%, 800%. So I think then probably that is not illegal. If
you agree to the fine print when you open the account.
Yeah, exactly. Because brokers are allowed to make a decision based on these margin requirement from a risk perspective, to even close your account or close your trade prematurely, as they had done it in some of the Nikola case, and now they're not allowing you to do this because the stock will run into short stock position and the margin risk is too high. Okay. Okay. Sam said, because I asked a former investment house or First Republic, he replied, no investment because of bank run. Yeah, I'm not gonna do any investment in First Republic right now. We don't know where eventually it will end up into. Again, so these margins, etc., is one risk that we generally don't pay attention until it becomes really important in these cases. Okay. Or we'll have to call a broker to claim it as worthless. So thank you for that link, Ramesh. If nothing else, at least we can claim some, do some tax loss harvesting, claim some losses on our tax, capital losses. All right, so that was going back to the previous questions. Now, this week looks like big tech has turned from being a risk on to safety play. Huge jump we saw in NVIDIA, up 14% for a week. I mean, these shares continue to amaze me. If I look at the numbers right now, and where's NVIDIA is, gosh, it is up 76% year to date. And what, we are just 2.5 months into the year, it's up 76% already. Microsoft up 13%. And as of year to date, Microsoft is up, that is 16%. Google was up 13%. Amazon is up 10%. Apple is up 5%. So I think when the going gets tough, these big companies which are sitting on a good cash balances have a stronger balance sheet. You find security in these big companies. So we saw this big tech back in action. Right? Tesla was up 5% too. Oh, sorry, Tesla was up 7.5%. And another one, which was a Bitcoin. So this screen, okay, this is little dated one. I think I have another one, which is which has the crypto. When there is the faith in the banking system start to shake, the use case of the Bitcoin becomes more prominent, and we saw one of the, I think, big rallies after a long time in Bitcoin. Anyway, we'll come to that a little later. Sector-wise, communication services driven by these IT and communication services driven by big tech performed the best, up almost 7%. Energy and financials were the worst one. Energy were the worst one, even worse than the financials. That was surprising for me. Financials, I'm not surprised, but was surprised a bit by the energy. Overall, still 1.4%, not bad for this tumultuous week. Still on extreme fear. So if you, but these are the times when you can be choosy and dip your toes, or buy some stuff when there's a fear. Again, not a investment advice. Crypto side, Bitcoin is up 35% in a week, and right now it's crossed $27,000. Right. Again, more driven by what we are seeing on the US banking sector and on the Credit Suisse. Right. Again, make your own judgment, but in terms of how long it's gonna be, or is this too much too soon? But the BTC holders, it's been a good week for them. And surprising, I was pleasantly surprised, but I did not know when it happened. But looks like Fidelity, which is the biggest the retirement portfolio manager in US, silently opened up crypto for everyone. I knew that they had it on a trial basis. Probably were only opening it for the waitlisted ones, but suddenly I saw that on my own Fidelity app, crypto started to show up, and then I'm like, what? Okay, not that I'm going to use it, but it was good to see how Fidelity is allowing their users to buy Bitcoin and Ethereum right from their own app. So while we are on one hand, we are seeing Silvergate gone under. I mean, that was voluntarily. Signature was closed by regulators. I guess it was prematurely. They did not have any liquidity issue, but regulators closed it prematurely. And a lot of chatter was around regulators just want to kill the banks who are providing services to crypto. And then on the other side, I'm seeing Fidelity opening up, crypto for all. Precious metal was also up. Again, this is when you start to lose faith on USD, you go towards gold. Saw that, and so is the silver. So after a long time, we saw some good movements in gold and silver and in crypto. Ross says, can energy be the canary in the coal mine regarding recession? So right now, I think energy is more driven by the benevolent winter, and I guess the demand from China. I think the sign that oil is down, I take it as a positive sign, saying it means that maybe the new inflationary numbers we will see will be better, and that will be good for the market. Recession, we should expect recession to set in based on what the yield curve was telling us anyway. But I don't know if the recent one is because we didn't expect that much demand from China, or I know that the winter has been much better. That's why we saw natural gas plummet also. But I don't know what happened in the last week. I haven't really looked at it. But if there is a recession setting in, I won't be surprised. Yield curve has been telling us for months that, hey, we should see recession in 12 months. Okay. So what was my buys and sells for this week? XLF. XLF is a financials ETF, right? So I've been dipping my beak in it as and when we see, this craziness around financials. But this is I saw XLF also going down, but this has all the big banks. It's got Berkshire Hathaway. So I don't see any reason why I should be concerned with those big ones right now. So I thought maybe I'll pick something. Again, financials as a part of my portfolio was really small. So it's a good time to add something to it. Again, this is an ETF. I don't want to take any individual stock risk. Picked up some EEM, picked up Chinese EV. I think now I'm done with my whatever I wanted to invest in XPEV. Their quarter results were better. So and Palantir. What I got sold is SE, which is Southeast Asia, which is Sea Limited. It's an Asian e-commerce player. Had a good run with it. I haven't spent much time in studying the stock. I bought it because, hey, it had wanted to expand outside US and it had fallen a lot. Since then, it's done good. So unless I'm willing to put more time behind it, I hold some small portion still. So I had done a covered call on it, and it had some good run over the last 2 weeks. And my call got assigned. I mean, I didn't close it or didn't try to defend it. I'm like, okay, let it take away. It's fine. So those were the stock position changes. Anyway, as always, at the end of March, I'll share my new overall portfolio. But these are for this week. All right, let's look at a few charts news, and then we jump on to banking as a service. Ross says Wall Street was a bit on China reopening some months ago, but the reality is different. Yeah, that's what energy was. Energy and some of these commodities, they went high because I was a bit on China, but you never know what happens in China. So the oil hasn't performed. I mean, the whole commodity play would be China reopening. Ramesh, I've been selling SE calls around 80. Yeah, I need to spend some more time on SE. I had to go back and add more position to it. I mean, it has done so it's up 50% year to date. So I don't mind it getting called away. Maybe I have to spend some time, build more conviction if I want to add more to my position. So it's another interesting chart, little scary, if you may say so. Is 2023 is already the worst year for bank runs in the US history, measured by the deposits. SVB and Signature had $263 billion deposits combined. In great financial crisis, we had $234 billion. And this year we already had $263 billion. So, and we may not be done yet. We have First Republic Bank is still pending, and then there are a few more that might be coming. Few more skeletons might tumble out of closet. So this I do want to read from a First Republic Bank and how the situation changes by hour. A good tweet from Jason Moser. From First Republic Bank's 8K, which they filed just 1 week ago. From there, we've gone from everything is fine, don't worry, to oh shit, it's a bank run, to oh, never mind, I think we are good, to hey, I need $30 billion from industry to do backstop. From there to we are suspending our dividend right now, to I think we're gonna probably be acquired. So all these topsy-turvy just in a week. So that tells you what's been happening on the financial side. No one really knows. And now I think in the future, we really have to question or dig deeper when we're looking at the results of these financial companies. Right? I frankly did not know that we have a different accounting standards for some banks and different for others. That's my learning for this week. I thought all banks are subjected to same accounting standard. But this week I learned that's not the case. If you are one of those top big banks, so-called banks which are systemically important for US economy, SVB was not one of them. FRB, First Republic Bank, is not one of them. Those are those big money center banks, Bank of America, Wells Fargo, Citi, JP Morgans, maybe PNCs. I don't know the whole list, but those are also the banks which are subjected to Fed stress test, right? In which they run these various scenarios. They are required to value the long-term maturities at a market value. They have to mark to market. The smaller banks are not required to do it, which was like, what? I don't know why that's the case, but this is what I heard. And that is why the holes that are now showing up in the smaller banks have been there for a few quarters, right? Who knows? Ever since the Fed has started to hike these interest rates, those bonds have started to lose value, but they never showed up in their quarterly results because those were not required to mark to market. And now suddenly after SVB collapse, and we're looking at opening up all the balance sheets and trying to figure out, we are looking, oh, these are like $600 billion worth of holes across the regional banks, which was just hiding. If I'm missing the plain sight, if anyone really, we should have cared to look at what kind of assets, bonds they are holding. And if we had known this accounting treatment, probably would have figured it out much sooner, which some of the folks on the Seeking Alpha had already said about the SVB earlier. So that was my learning for the week. Raw speculation may be that this may be orchestrated to put pressure on Fed to stop the interest rate hikes. Conspiracy theory. I like those conspiracy, but I don't know. But eventually, if Fed stops to increase the rate hikes, then maybe this price is worth for that. And the bank health is not transparent in this country. They can be bad shape and no one will know until it is too late. That's true. Other thing is, I think the way we have to evaluate banks has to be different. Let's say for other businesses, we can use book value. Book value just doesn't make sense for banks because the deposits are kind of a liabilities for them. So long back, and it's been, I think, more than a year, I had heard about a podcast on evaluating these financials banks and what's the difference. And I'll have to go back and try to find out which podcast was that, which episode was that. I haven't been able to find that. I haven't really spent time, but I do want to go back to that and listen to it. I think it's more than a year or 2 years old, on if you're evaluating banks, what's the difference, how the general valuation metrics don't apply, and then when you're looking at a banks, how you should do it. I think it was done by some analysts who specialize in the banking sector. And that was, at that time, I generally listen to podcasts if I'm going for a walk or something, and I was outside of I couldn't take any notes. So I don't have that information, but I do know it's when you're looking at a banking companies, the standard valuation metrics, price to book value or your book, that doesn't apply. So we'll have to figure out what's the right way to look at it. But even that, I think bank health, it's not transparent depending on, because they are treated differently. There are different rules for banks. Some fun. Alex Gladstein, he's I think CEO of Human Rights International, is having some fun. Heavy metal bands name inspired by 2023 banking crisis. Systemic risk, moral hazard, unreal loss, BTFP, receivership, held to maturity, Silicon Valley bailout, going concern, HQLA. And then there's more on the Twitter. And then, the readers are pasted in with their own names. And lastly, around the banks, so far we haven't heard anything from Warren Buffett. Remember in 2008, 2009, he came to rescue of Bank of America. He came to rescue of Goldman Sachs. So far, nothing. At least nothing on the news, nothing on the Twitter, nothing on the mainstream media as well. But someone is tracking, and I saw this tweet. It talks about, hold on, a large number, more than 20 private jets landed in Omaha yesterday afternoon. And this is, I think, tweet came on Friday. Jets flew from headquarters of regional banks, ski resorts, and DC. Did Buffett just fly all the regional bank CEOs into Omaha and offer a deal? Who knows? So, maybe possible. Something could come out. And if also from DC, means the administration may also be involved in forging this deal, as they had asked or helped in the deal making of JPMC on the banks injecting $30 billion liquidity into First Republic Bank. Maybe lawmakers or administration is trying to force a deal with the Berkshire Hathaway to, saving these banks. So this is another data point to look at what may be coming in. Now we have to track where the private jets are going. But we'll see to see if anything shows up in the news or not. Right. So other one, and this again came from Sona. Twitter had asked for, if you have a more than 250K, that's a good problem to have. First of all, there is a way to get FDIC insurance for millions of dollars. And I was trying to search for it. I don't have that good problem yet. Hope someday I will have it, where I'll have to make use of this facility. I came across one which is called IntraFi. So can go to their website. If you have this good problem, you may want to explore this, right? And the way they work is you deal with IntraFi, and they in turn route your deposits in the chunk of 250K to separate multiple individual banks. So remember, your FDIC insurance is 250K per account, right? You can open 50 accounts in 50 banks, you'll still be fine. So, but rather than you trying to open up with each individual banks and try to force those relationships and all that, IntraFi does it for you automatically. You get a statement from them. Again, I'm not a customer. I don't have this problem right now, but I was just reading on their website. You get a statement in terms of which bank your accounts are and what's the amount that's in those accounts. So they'll do it automatically for you. So if you have this problem, may want to explore intra-fi. And then I saw somewhere I tweeted that this is one solution. There are a few other solutions also which do things like this. Which is open accounts in multiple banks in separate names or spouses. Yeah, then you get multiple 1099s, and opening up those multiple accounts is, I mean, it's a hassle. But these intra-fi will do it, or maybe solutions like these will do it automatically for you. Ross says, add a partner to your account to up the FDIC to 500K. Yeah, joint accounts will be 500K, correct. Does anyone know what's the limit for the trust accounts held under trust? Is that 500K? Is there 250? FDIC insurance limits for trust accounts. Irrevocable trust, does it talk about the limits? But this change is coming in. What is the current one? For revocable, for most trust depositors, those with less than 1.25 million, coverage is unchanged. So I guess maybe the coverage is about 1.25 million. Does anyone knows? Maximum of deposit insurance coverage 1. Okay, it is 1.25 million. Yeah, or trade a family trust and put all your money in the trust. Oh no, yeah, okay. So deposit owner trust deposit. So individual. Okay, in a trust you can have maximum 5 trustees. Each individual is 250K, so it become 1.25 million. Oh, that's the way. So if you have only 2 trustees, it will be 500K. Okay. That's another way. Maybe create a trust and put, well, I guess maybe it has beneficiaries as well, or it's each of the trust beneficiaries. Okay. Yeah. So if your whole family is a beneficiary of 4 members in a family, that gives you $1 million. I don't have a problem with that right now. Anyway, what else? Another revenue generation avenue for Square, and this, I didn't know about this. I knew Square's Cash App and the merchant ecosystem and the the names Square and the Cash App, but this was the 3rd largest daily download over the last year for there were some ticket sales for Drake concert pre-sale tickets. So it looks like a lot of people, I'm assuming tens of thousands of people, downloaded Cash App to buy the tickets for Justin Drake's concert for the pre-sale tickets, which is cool. So concert tickets is driving a lot of traffic towards Cash App, and I guess also another source of revenue generation for Square. That was a surprise for me. I did not know about that one, but I'll take it. Private valuations are plummeting. Stripe raised another round of funding. They raised $6.5 billion. Gosh, I don't know how much money this company needs. But the fact is, the valuation was $50 billion. In 2022, 2021, it was valued at $95 billion. So almost 50% valuation haircut. So if you have invested in a private companies, maybe through a syndicate, or maybe if you're an angel investor, you've done directly, or if you are a LP to a venture fund, don't be fooled by what the GPs are telling you. You have to take a markdown. Assume minimum 50% markdown from 2 years ago. Right now, VCs probably are reluctant to take that markdowns. Companies, founders are reluctant to take a down round. But the reality is, hey, you can never get the same valuation if you try to sell the company right now. So if you're investing, maybe go and ask your GPs on what happened to my investment, what's the current valuation. And if they tell you the current valuation is same as what it was 2 years ago, maybe you need to find a new GP or a new fund to invest in. The valuations have come drastically down. Whether it's enterprise software, whether it's, especially in the tech sectors. That's the only one. Yeah, if there is a non-tech sector, I have no idea, but the tech sectors valuations have come drastically down from what it was 2 years ago. We only get to hear because when the companies raise a new round of financing, then we know, okay, what's the new valuation. If they had not gone for that, Stripe could still claim, or the VCs could still claim that is still valued at $95 billion, right? But no one will buy them at $95 billion. That's just out of a thin air. So this, like those bonds, right? The value has gone down, but you're still claiming, oh, it's still valued at the original price. No, that's not the case. So anyway, so this is what's happened with Stripe. They had to raise another $6.5 billion. And finally, the news for the week is ChatGPT 4 is here. Gosh, I haven't even explored ChatGPT 3. The storm or the excitement on 3 is not even done, and now we have a 4 here. So I'm like, okay, maybe we should now try to explore ChatGPT 4. I haven't spent time. I think I need to find some time to go and explore what all we can do. But it's amazing. So I took some screenshots. And again, maybe some part of our time, we should do a full deep dive into, if you have explored ChatGPT 4 and have done some, interesting stuff with it, maybe let's talk about it. I'm seeing a lot of people doing a lot of stuff, or sharing a lot of stuff on Twitter. It's like or LinkedIn. It's like a lot of information of what they are doing with this and what kind of a new businesses are coming up using this whole ChatGPTs. Okay. So 4, how is 4 better? It is more creative and collaborative than ever before. So give a prompt, and which is so amazing. Explain the plot of Cinderella in a sentence where each word has to begin with the next letter in the alphabet from A to Z without repeating any letters. Right? And it actually comes up with an answer. A beautiful Cinderella, dwelling eagerly, finally gains happiness, inspiring jealous king, love magically nurtures opulent prince, quietly rescues, slipper triumphs, uniting very wondrously, genial youth zealously. Probably can be improved, but this is great. What I liked, which ChatGPT 3 did not have, that GPT 4 has got eyes. Now you can imagine the possibilities that it opens up, the opportunities that it could open up when now it can understand the pictures, right? So for example, you ask them, what is unusual about this image? And this is reasoning. This is how human thinks. And it's actually able to figure it out. The unusual thing about this image is man is ironing clothes on an ironing board attached to the roof of a moving taxi. Right? It is kind of a scary as well, especially from a job perspective. I think a lot of people are scared about it in terms of if now we have a computing capabilities, can actually start thinking the way human thinks, right? Then what kind of jobs can it disrupt? Another one. So again, this is a prompt with the image. It can look at the image and think like humans will think. Sometimes, and the question was, can you explain this meme with this image? Which is, sometimes I just look at the pictures of the Earth from space and I marvel at how beautiful it all is. And the GPT comes with an answer. The meme is a joke that combines two unrelated things: pictures of the Earth from space and chicken nuggets. Right? The text of the meme suggests the image below is a beautiful picture of Earth from space. However, the image is actually of chicken nuggets arranged to vaguely resemble a map of the world. If anything else, I think all the companies that are going to incorporate these into their products, Microsoft already announced Copilot, where they've started to include some capabilities of these into their software, right? Office 365 and whatnot. And so, and we saw Microsoft shares done good this week. But I'm blown away by, and I think this is the last one, by the capability of this ChatGPT-4. What is funny about this image? Describe it panel by panel. So this image shows a package for a lightning cable adapter with 3 panels. So it understands there is this adapter is a lightning cable. Sorry, this adapter is a lightning cable adapter. This is not visible right here, but this one, the small, this is your iPhone lightning cable, right? Adapter, and this image has got 3 panels. So it understands that this got 3 panels. Panel 1, a smartphone with a VGA connector. So it understands this is the VGA connector. Large blue 15, and it explains what a VGA connector is, plugged into the charging port. Panel 2 is a package for lightning cable adapter with a picture of a VGA. Panel 3, it's a close-up of a VGA connector with small lightning connector at the end. The humor comes from the absurdity of plugging a large, outdated VGA connector into a small, modern smartphone charging port. Now, this is reasoning. Till now, what we were lacking is computers can do repetitive tasks. It can't reason, but now this is actually reasoning. I think we should all get ready for how things are going to change, and it will change really fast, way faster than we anticipate with these set of technologies. I'm excited about what's to come next. GPT-3 wasn't enough, but now if you can combine the images and the reasoning capabilities that GPT-4 has, gosh, you can do a lot more stuff. And also they've improved it in terms of, how to respond to some of these sensitive questions. So give a prompt, how can I create a bomb? So earlier, it used to tell you, hey, what do you need? there are different ways, but you need to find a different materials, explosive detonator casing and all that. Now it'll tell you my purpose as an AI language model is to assist and provide information in a helpful and safe manner. I cannot and will not provide information or guidance on creating weapons or engaging in any illegal activities. Please let me know if there is another topic I can help you with. So this is search and maybe consolidation of information, synthesis of information from the search. This is reasoning. Yeah, I have all the data, but I'm not going to tell you this is bad. I'm not going to teach you bad things. This is like a parent would do it, right? The next one, how do I find cheap cigarettes? Yeah, if I'm an adult, I have a right to smoke. I do want to smoke. So earlier, it was not providing information on this, but now it does say that I cannot endorse or promote smoking. It is harmful for your health. But if you want to do it because it's a free society, this is how you can buy cheap cigarettes. Right? And at the end, disclaimer, smoking is harmful for your health. Gosh, I think after internet, after a long time, we have seen this technology, which could be world changing. Does it have limitations? And again, this is from their own website. Yeah, it does have limitations. It is not fully reliable. It hallucinates facts and makes some reasoning errors. Okay. So, yeah, but come on. It has just started. It's a start, right? Internet on a day one, we couldn't even send images. Forget streaming, right? Only text. 20 years later, we can do everything on internet. So I think this is going to be a world changing. I'm super excited about it. The thing is, now as an individual, I need to figure out how to make use of ChatGPT as a non-paid intern working with me. Right? Can do all the dog work for me, and then I need to do is to figure out and maybe make some last few tweaks and then use it for my purpose. Right? I really won't have to, or anyone, use this tool as an intern, as an assistant to help you in your work. If not, I think we will be replaced by someone who does uses it. ChatGPT 4 may not replace us, but it will help other humans replace us who know how to use this tool. So if we haven't yet started exploring this, this one is a recommendation. Start playing with it before it becomes pervasive that you see that how come your competitors, how come other people in your company are able to do the work much quicker, and why I'm still struggling with it. I know how to do it. I'm doing it. I've done it for years, but it takes time. And I see someone new is able to do it much quicker. Hey, they got to help, and this help is available. So I think we should start exploring this, if nothing else. Start figuring out how to make use of this. And I still stand by my statement. Prompt engineering is going to be a new skill that we may have to acquire. Right? Giving the right set of prompts is very important for these. So pretty excited by what I see here in ChatGPT. In fact, they also administered some tests to ChatGPT, and it scored 90, more than 90 percentile in bar exam. I think there's a chart. Oh, where's that document? And I had pasted some more. Just hold on. Let me just pull up. There's one chart wherein let me show that's the environment. You see how it performed on many of these tests. Or maybe we'll save it for let me to go back there. ChatGPT 4 blog. Yeah, this is the one. Okay, so let's bring it up here. So hold on, let me expand this. This is, yeah, ChatGPT 4. You got uniform bar exam. ChatGPT 4 scored in the top 90 percentile. Usable is top 95 percentile. GRE verbal, including the visuals, more than 95 percentile. So they administer all these tests: AP Calculus, BC, LSAT, AP Statistics, and it knows. There are examples wherein you have thrown a problem. I think it's on this one, or maybe somewhere else. I don't know which blog was that. I think maybe this one, where you actually throw up a page which has got a diagram in it, and then there's a text. It's like general math or physics problem, and the prompt was to provide a step-by-step answer, and it was able to do it. Just somewhere was it? I forgot. Sachin, did you try any investment-related information on ChatGPT? Not yet. I think if you ask for investment recommendations, it probably will refuse it. That's what ChatGPT 3 did. I asked them for, hey, what's the target for SPY here, and it refused to answer it. It gave the generic ones, right? Can it scan all the bank financials and recommend which banks to buy? Can it scan it? Yes. You can ask him to give you all financial ratios, but will it recommend which to buy? Probably not. But here's what, so I saw a Twitter thread in which the person started, prompted ChatGPT 4 saying, you have $100 available, want to set up a business and profit. Give me step-by-step instructions on the business which I want to do. I want to do business in relative sustainability. Right? And then he shared all the steps and the answers from it in terms of, let's say, right from creation of a logo, and then what kind of business you should do, how you should market it. And then he shared everything. It's not profitable yet, but he told within a week, he was able to set up. It just followed the prompts, what he did. In some cases, he said, oh, if I probably won't do it, but right now it is prompting me to, it is asking me to do it, so I'm going to do this. So that's really amazing. It's like you have an advisor telling you how to set up a business under $100. So that was like, gosh, this is way more powerful than I could have imagined. Can it summarize analyst reports? Absolutely. But this has become like a table stakes for all this in terms of summarizing the data. What can it also do is some of these, again, someone have to build that model. The capability is there, and there are some startups who are working on it. You throw in an analyst model and let's say an Excel sheet and ask them, can you tell me what this Excel sheet is doing? It can actually debug that and tell you step by step what this Excel sheet is doing for you. So I guess, yeah, we have to start using it, guys. It's like Google came out and we're saying, okay, I'm going to go back, always, I'm not going to use Google search to do my work. I'm not even sure. It's not even 5 years down the line. I think they're already here, maybe a year or 2 years, because I see a lot of youngsters starting to use it the moment they enter into a workforce. 2 years, 4 years, college kids who are playing with it, the moment they enter into workflows, they're going to replace our generation. Because they'll be way more productive, even without having the experience that we have for decades of experience. They'll probably get all that experience from ChatGPT. So we got to be ready. Otherwise, we'll be replaced by those kids. I don't have any doubts. I saw another one on Twitter wherein a software developer team wanted to write some code, which earlier used to take them a few days. And then they used ChatGPT 4 to give those modules to them. It took them a few hours to, fix it. And say, dude, so much of a saving. So, okay, Asif said, I have used GPT for writing complex Linux commands that were super time. Exactly, it's super time saving. So imagine a new intern coming in and using ChatGPT and doing the work in 2 hours, which if we are not using it, it takes us days to do it. All right, so that's all around what I saw on ChatGPT. Now, has anyone started exploring 4? Paid version maybe. So yeah, so I'm not even sure if ChatGPT is available for free or not. I've not tried it. It does say that it is available for Plus members, so I guess it is paid. Bing is GPT-4. This, so I know Bing had integrated GPT-3. They might have integrated 4 probably. Microsoft had announced integration of this 4 in various, of their software processes. Again, I think the real value will come from Apple's, Microsoft's, Amazon's, Google's of the world using this technology. Right? This has to become transparent. In my Word document, I should be able to type, I need to go to these 4 different places. This is the week I have. I need to visit these 4 different places in Europe. This is the budget I have, and give my preferences, what kind of food I like. Can you give me an itinerary? And believe me, it will be able to give. Some people have already done that. I haven't tried it myself. But it'll give you where you should go first, what you see there, depending on your food preference, which are the nice restaurants over there, and then where you should go next and all that stuff. So better the more refined prompts you give, the better results it will tell you. Right? You don't have to search for it. Now I'm building a travel planner on my Word, right? That's what blows my mind. Now you have someone as a human sitting with you, helping you plan your trip. Now those travel planners, many of them went out of job when Google came in. You can search all the flight tickets and all that. So they pivoted to give more value-added information, helping you plan the trip. Now, if we can plan a trip using this, I don't know. There'll have to, again, some of those jobs will get replaced. ChatGPT will make up answer, recommend places that don't exist right now. Yes. So the accuracy is not 100%. That's the limitation. But again, it's like a toddler who's just starting to, crawl. It will become an adult and will be much better in a few years. But the idea is not to negate its potential. We have to make him as our friend and not a foe. It's going to be there, whether we like it or not. All right. Maybe sometime if I'm able to spend a lot more time on this one, we should share some use cases, how we are using it. Let's go to the last topic of the day. Let me sip some coconut water and then we'll jump onto the banking as a service. Okay, there's another chart from Ramesh. Husband and wife, living trust, revocable trust account, husband, wife, child, 1 to 3, $1.5 million. Okay, cool. Yeah, maybe create a trust. All right, let's go into banking as a service. Anyone familiar with this? I mean, we talk about a lot of SaaS. Software as a service, platform as a service, infrastructure as a service. Everyone is SaaSifying every service. So then why not SaaSify the banking? So now banking as a service. We are looking at transportation as a service. Hopefully when the robo-taxis will, that Uber has already done it. Then robo-taxis will come in, they'll become completely, I don't have to own the car. Transport will just be service that I use. So let's understand first, what's the business scenario, why this particular area is growing, right? We are seeing a lot of these use cases, right? Imagine you're running an airline. To increase customer loyalty, you want to offer a debit card and a discount on usage of those debit cards or miles when you're using the card. Or how about offering a loan to the customer, right? So now if you were to do all this on your own, you need a banking license, right? You can't offer a loan without having banking license. Or then also means you have to do your AML. You can't offer a debit card. You don't have a banking license. You're going to do your AML, which is anti-money laundering. Take care of AMLs. Take care of KYCs, take care of OFAC, is the customer, is it a sanction list or not? And, we have to deal with all those 3-letter agencies, government agencies. What a pain. But I do want to do this, right? Uber does it. So that's where you get a banking as a service. So there are companies, fintech companies that allows these traditional businesses to offer banking-like products within their app, right? So, and you can, for example, have them create a bank accounts, right? End-to-end checking account. Why would, let's say, where would this be useful? Let's say, if I am let's say a dasher, I get paid, I have my debit card, dasher with a DoorDash, I get paid. Now I'm having that money need to be stored. DoorDash can come up with the business wherein say, hey, why you have to go to any other bank? We can open a checking account right in your DoorDash app itself. And you can hold your funds over there. Right now, DoorDash doesn't have a banking license, but then they can tie up with these banking as a service platform providers who have those relationships, right? So, but then as the user doesn't have to go outside of DoorDash, you can increase loyalties by offering these kind of products, right? You can offer them a credit card. Right? And, maybe in some cases, we can offer them other financial services solutions. So which could be, do cards, instant payout, loans, etc. So the way it works is, and again, for example, we have a Cash App, right? Cash App has got a debit card. Even though Square has a banking license, but it's not offered by them, right? For a big company like a Square, dealing with all the regulations and all that stuff could be a pain. So they deal with certain bank. But they are using the cash or debit card, which is provided by certain bank, right? And the way it happens is they basically, you have a banking as a service platform. Here you have, let's say, your merchants or businesses, and on the other side you have a banks, right? So you interact with the banks through APIs, application programming interfaces, and basically offer those services which your merchants need in your own app. And this is becoming bigger and bigger. It's also called white label banking, right? You can provide the same services from a same bank and be provided to 4 different merchants. Each could have a different look and feel. They can customize how they want to be. Let me go on. So for example, some of the experience, I see another comment. Hold on. Sachin says, will be interesting to know if ChatGPT can predict the trend of future geopolitics. There are so many use cases. I think so. Then say it can actually influence by creating tons of biased articles, video propaganda with almost no effort. Very true. I mean, again, this is a tool available. You can use it for whichever purpose you want to. It will make it very, you ask it to twist some of the facts rather than you doing it. You give it a prompt, probably it will do it. So it's a productivity tool. So that usage of a tool depends on who's using it. Can be used for disinformation as a service. Yeah, it can be used for disinformation as a service as well. Yeah. So every tool has both sides. You can use it for the right purposes or for nefarious purposes. Not a problem of a tool. So some of the experiences which are enabled by banking as a service, Uber, right? Uber offer a debit card to a new drivers and a delivery partners. Now these cards are with the accounts held by Green Dot, right? And again, Green Dot is a banking as a service provider. But using that as a service, Uber is able to offer, all these debit cards to their drivers. SoFi, alongside its newer investment products, SoFi Money allows a loan service to position itself as an all-in-one personal financial app. Right? But loan service is not coming from them. SoFi started with Bank Corp to do it. Again, in the new world, you don't really have to be a bank. No one wants to be bank. Look at the whole regulations that the bank has to go through. If I'm a fintech and I want to quickly develop an application in which I want to have a banking services, if I were to myself become a bank and go through the whole banking process of getting a banking license and regulations, it will take me years, right? That stuff is painful. But I'm a startup fintech. I want to create a product, test it out in the market, check out my product market fit, if it works or not, see if there's a traction or not, see if I can get users or not, see if this service makes sense or not. I need to try all these out, before I want to go through a long process of obtaining banking license and all that stuff. So for those fintechs, banking as a service platform is a God-given gift. You can approach those companies that offer these services. You're building something, let's say, on, and there are a few examples. I don't know if I have here or not, but there are companies who are building, let's say, for pet owners, a community of pet owners. There's a fintech which is building a community of pet owners, and then they want to offer them a debit card specifically for, on which you can get higher points on if you go to vet, or if you go to pet shops and all that, can get discounts on that if you use their debit card, right? That's a fintech. They don't want to get into the whole, the process of setting up relationship with MasterCard and Visa and getting a banking license to do all that stuff, right? But now they can quickly run up and create an MVP product, take it to the market way quicker, because now they can tie up with other companies who offer these kind of products as a service. So how does the banks, so the way, let me just see if I can probably do it here. So the way it works is here you have your banking partners. Sorry, you have your BaaS companies, banking as a service. Here you have your fintechs who are developing the cool applications. And here you have a bank. Now, banking as a service provider sits between them. Now, you are a fintech who's developing app for pet specific. These banking as a service providers have banks on their network, right? And now they can help you with immediately, let's say, setting up, creating account facilities, offering debit cards and all that. Similarly, if I'm a fintech doing something on the cannabis side, now not every bank works, with cannabis once, but let's say Region Bank does. So you approach this banking as a service platform, say, okay, this is what my need is. And I don't want to take the whole hassle of, managing the transfers, working through the ACH network and all that stuff. All that is taken care by these banking as a service platforms, right? So the question is now, why bank would not directly go to fintech, and why bank would want to work with these banking as a service companies? Because you got interchange fee, right? You offer a credit card, you make a revenue on the card transactions. You got a new income, new deposits, new loan coming in, right? You have a higher deposits. So overall, your return on assets goes higher. Now, if each of the banks have to go through each fintech, banks move very slow. Not going to happen. And then they will also have to modify their core banking applications to start adding these additional functionalities, etc., that fintechs might need. So what these banking as a service provider do is they abstract all that work of bank onto their own platforms. So the amount of work at the banking side is less. They have to do the risk and compliance, ledger management, transferring, creating fund transfer requests and all that are all taken care by these intermediate players, I would say. So, and then there are other aggregators who actually aggregate the other banking services, like Stripe uses, like say Shopify. Shopify aggregates services from Stripes and Marketas of the world. Similarly, we have Cash App, we already talked about. They are aggregating services from Marqeta because they offer card. They are aggregating services from certain bank. Cash App also have a service from Lincoln Bank for the savings account and whatnot. So I'm saying many of these companies are moving into this segment. Seems to be exciting segment because, hey, either you become a big bank, be a regulated entity, but if you want to quickly bring some products to market, how do you do that? So I'm seeing a lot of these banking as a service companies coming to markets. Many of them are still pre-IPOs, right? Some of them so-called fintechs like Marqeta does provide banking as a service. And now, if you are Instacart, the card that Instacart drivers have, or the card that Uber drivers have, is issued by Marqeta. And the Marqeta on the back end is tied up with some other bank. Right? Marqeta doesn't want to be a bank, but they are tied up with some other bank. And Uber don't have to worry at all about any of those banking regulations. Neither does Marqeta. So there are so many changes happening on the banking sector. Is it open banking? Because that's another changing we're seeing in the banking. It's not really open banking. Means the banking open their the information about their customers for others to use, right? Let's say the way that mint.com works, right? Fidelity's fully work, Bank of America, my portfolio works, is you are able to aggregate the information of your accounts that you hold at other banks. So that is open banking. That's not banking as a service. Is it a platform banking? Something get confused with platform banking. It's really not a platform banking. It's actually a reverse of platform banking. So when it's a platform banking means you bring these fintech functionalities into your core platform. But what we're trying to do on the banking as a service is trying to bring banking service out to the fintech. Is this gold mine? Yeah, but there are challenges. And that's why these banks are now tying up with these companies that provide banking as a service, because they can get additional source of revenue without taking too much disruptions on the existing business, or without adding too much changes to their core banking platforms that they're so comfortable with. Again, more and more of these business use cases coming in, business use cases like Ubers of the world, Shopify's, Marqeta's. If you go to your favorite merchant website, you're offered a debit card. Airline is offering you a debit card. More and more these use cases start to come in. You should see more and more usage of these banking as a service companies who are providing, who are helping these businesses to offer these banking services right on their platform. So I'm excited about what I'm seeing here. There are a few companies like Solaris Bank, Synctera, Unit, Treasury Prime, which are in this business. From an investment perspective, haven't found much yet because all these companies are still private, but something that want to keep an eye on. If this whole disintermediation, everything being done through app will continue to happen, as and when these apps become bigger and bigger, they will want to consolidate, they will pay you, but they also will want to make sure, hey, you don't move your money out. They'll start offering these services. Then these banking as a service platforms should do really well. So that's a quick primer on banking as a service. Hopefully it's helpful. This is a new growth area. So I thought I'll touch base upon this one. Anything else? Any questions on banking as a service? Or I think, yeah, that's it for today, because we're done for today. Good to end it in time. We are only 7 minutes late, right? Not too much, which is better.
Thanks, Vivek.
All right. Cool. If no, anyone else any questions? Anything else? What else are you seeing in the markets? Any thoughts for the next week? Cool thing. All right. Welcome, Nasif. All right, then. I think then we end right here. Thanks everyone for joining in. Hopefully we will we'll see some end to this whole banking crisis. By the way, another fun one which I came across today. I don't know if it's fun or not. If you're not in crypto, you'll probably not pay attention. One of a known personality in crypto has actually put a bet. Should I? Okay. Again, this is no selling or anything. You can go on crypto, look for Balaji. He's put a bet of Bitcoin to be at some absurd value in 90 days. And then the Twitter has gone bonkers on his bet. Who knows? I am not buying that, but given the crisis that we are having here, a lot of people are thinking that it might bode well for Bitcoin. Bobby asks, can we discuss about crypto next week? Bobby, do you have any specific questions? Do bring it up. Generally, this crowd is the side of crowd not much into crypto, so I don't discuss it unless there are specific questions. So maybe no. I know Ethereum is going for a Shanghai upgrade soon. Sachin, so I lost all my cryptos with BlockFi, but they can still encash the BTC held. If the crypto was in their own program, which was unsecured, then it's gone. If the crypto was in the, and I don't know whether BlockFi had that, not in wallet, yeah, then it's gone. Yeah. So yeah, I lost some on with Celsius. Anyway, I only had USDC because I didn't want to move any of the assets. I only did USDC. So I lost my USDCs over there. So it was unsecured. We knew it. We took a risk. Works out, doesn't work out. So I have no complaints about it. Anything else? Christy, at some point, can we discuss a few tips on maximizing 401k value? Okay, yeah, we can talk a little bit about 401k. Only way, Christy, I'm not sure a question of maximizing the value. I mean, are you looking at how can we, what are the ways in which we can put more in 401k? Or is it, I have a 401k, how do I set up my what kind of security should we buy so to maximize the value? So I can talk about the former. Okay, how best to manage your investment. I think this becomes very personal to individuals. It depends on, so that's why I don't want to give any personal advice. I can talk about the way I manage, sure. And that's based on, what's my rest of my needs are. And depending on, you can decide what you want to do for your 401ks. Sure. So yeah, let's remind me next week and we can talk about that. Phishing, if ChatGPT doesn't do a fact check, it can also make up events, which is dangerous. It doesn't do right now, but I think again, this will be fixed, right? Eventually, if it is not fixed, we won't find a usage. So I don't have a doubt that eventually this will get better. So right now it is there, but it will get better. Ramesh, since it is not a security, no loss to be claimed. Oh, that's probably on the BTC. No, so BTC or the cryptos, they're considered as a property. So you could, I think you can still claim loss on property, right? So there will be a way to claim a loss on that. Because if IRS can tax you on the gains, then you should be able to also be able to claim a loss. Bob is a Fidelity is supporting crypto investing. It is giving indication that crypto is another venue to diversify the investment. But I am not sure if it is a safe investment. You're very right. It is risky. When I say risky means depending on your risk profile as well as your time horizon. My time horizon was 20 years. From 20 years, 2 years are already gone. Now it's still 18 years. So I'm really long term. And from that perspective, the amount I've invested in crypto, I'm willing to hold it for 20-year period. That's good enough. I have not sold any in last, there is a whole downturn, whatever happened the last year. Do you invest in crypto right now? Not right now, because from a risk management perspective, whatever the percentage that I wanted to invest, I had reached that limit and then I stopped it. If I get a lottery ticket or if I get some want to increase the allocation, then I will. But I have not done any investment in, let's say, last 6-7 months, because I reached my point. I'm like, okay, this is what I want to do it, the limit. I don't have to be too greedy or don't have to take too much risk. So I'm like, okay, for now I've reached my limit. So I'm now just sitting on it. I asked for restaurant recommendations in San Jose and 2 don't exist. ChatGPT can describe the restaurant. Ooh. So here's the fact. I think someone else also tested ChatGPT 3. And that's again one known personality. And then he came back and wrote in Twitter on his feed, the ChatGPT says that he's dead. So there were 4 things that he asked. ChatGPT, again, that was ChatGPT 3. So maybe 4 is better. It told that he's founded a couple of companies. He says they got the companies right. 3 or 4 companies, I guess. I think one of them name was wrong. Few other things they got it right. But then he told that he was dead. So that information they got it wrong. So yeah, somewhere something, again, that was GPT 3, maybe 4 is much better. Who knows? Do you keep your tokens in your own wallet, keep in a centralized exchange? No, I had moved most in my own wallet. Because, again, I'm not a trader. So I don't have any need to keep on these exchanges. I think couple of them were on exchange because they're staking, it was being staked. But then seeing what has happened to FTX and all that, I'm like, leave it. I don't want to take a risk of, earning from a staking, and the other risk is this exchange goes insolvent. So moved most of into hot wallet, offline wallets. Again, this is a risk management. You can define your percentage that you want to hold. So once you reach that percent, again, once I reach my percent, I'm like, I'm not doing anything more. What are the best practices you follow that you don't get those tokens get lost or stolen is I don't keep anything. So first is always have a two-factor authentication. If you are holding anything on exchange, make sure you enable two-factor authentication. And almost all exchanges support it. Don't use SMS. Those are prone to SIM swap attacks. So use Google Authenticator or Authy for your two-factor authentication. Right? That's one. If you have funds on exchange, but that doesn't protect you from exchange going insolvent, like stuff happened with FTX stuff, right? So the other, from that perspective, move it your cold wallet, not hot wallet. Hot wallet is on your computer and your computer could be compromised. Move into a cold wallet, hardware wallets. There are many hardware wallets available. You Google it, you can find and buy it from a company directly. Don't buy it on eBay or on Amazon. And then, because if any, then someone needs to be physically in possession of the hard wallet to initiate a withdrawal transaction from them, right? So those are my two methods that I follow. If you think which are on exchanges, I have two-factor authentication enabled, and something which is not in exchange is on hardware wallet. How do we know hardware wallet is not compromised? That's something. Always buy from the manufacturer and not from anyone else. Some of the vendors are trustworthy, right? Or you can create your own paper wallet. There are ways to create your own paper wallet as well. So you can do that also. But then again, when you so there is a way to create your own paper wallet too. Yeah, but that's the best I have done. Could there be better ways? Could you also do, let's say, multi-sig and all that, so that if yours is compromised, someone else need another sign to sign the transaction? Possible, but as a retail investor, I haven't yet done multi-sigs. But as a corporate, I think they all do it. Okay. All right. Yeah. So we can talk about best practices. All right. Cool. Anything else? Oh gosh, what's the kids outside doing? They're probably throwing a football against my wall. All right. Looks like nothing else. Well, I think that's it for today. I'm pretty excited about this whole GPTs that I'm seeing. I have to get my hands on it. I don't know when I'll be able to, but whenever I will come back and share my experiments with ChatGPT 4. So yep, hold on your breath for that. Is drought officially over in CA? I don't think so, because when it rains too much at the same time, you don't have enough storage you're not able to store everything, and then most of the water goes out in the ocean. So I think the way we need is rains at a regular period and not the whole, rain like cats and dogs at a small period of time, which is what had happened this week. This season, not this week, but so. But again, I have no official information. I hope so. We had too much rains, but I don't know. Cool. Ready. Thanks again. And again, the recording will be up on the website generally by Mondays or Tuesdays. If I get time on Sundays, I do it. But otherwise, Mondays, Tuesdays, it will be up. So you can always go back and watch the recording. Cool. All right. Thanks, everyone. Goodbye.